Hi there, my name is Ori Pounders and I'm a senior mortgage advisor on the Mortgage Broker channel. Now, in many of my videos, you'll see that I mention the mortgage broker channel versus a mortgage retail lender because utilizing a mortgage broker saves home buyers on average over $10,600 on your transaction. And if you happen to be using a VA loan, that average savings rises above $13,000 per transaction. And so if you've been looking to buy a home or you've been talking with family and friends about buying a home, or if you're a realtor and you have clients that are considering buying a home, I want to encourage you to utilize a mortgage broker in effort to save. Okay, getting into this particular video, we're going to talk about ways to increase your credit score. Now, I do want to clarify, as a mortgage advisor, these are just tips and tricks that I've seen work. It's just, again, just a tip and trick, no credit repair solutions here. And if you happen to be a realtor watching this video, go ahead and share it with your clients in effort to increase their scores. Or if you have any questions, feel free to reach out to me. I'd be happy to help you and add value to your business. Now, I would like to point out that one of the major benefits of working with a mortgage advisor on the broker channel, you get access to us personally, one-on-one, for your specific scenario. And so even if you might not qualify in this moment, you have us as an asset to you to prepare you and get you ready for home ownership. Okay, now getting into the tips and tricks of improving your scores. First, I'd like you to feel comfortable pausing the video between each step just so that you have a full understanding for your specific scenario. Now, I'd like you to either get a pen and paper or open a new Excel spreadsheet so that you can track your details for your specific scenario. Go ahead and pause it if you have to. Okay, I'd like you to create 5 separate columns. Go ahead and label your first column creditor, your second column balance, your third column credit limit, your fourth column utilization rate, and then your fifth column statement close date. I'll go ahead and wait. Now in the first column, I'd like you to write down the creditor for each one of your credit cards. So if you've got 5 credit cards, go ahead and put the names there on the first column. In the second column, I'd like you to put the balance associated with each one of those cards. So whatever balance you have left on those cards, go ahead and put them there. On the third column, I'd like you to put the maximum limits for each one of your credit cards. Now in the utilization rate column, what I'd like you to do is divide the balance into the limit, and that's going to give you a percentage. Whatever that percentage is, I want you to put it in the utilization rate column. And then lastly, find out what date each one of your cards closes every month for the statement. Go ahead and put that date there. Okay, I'm going to do an example with you, but I'd like you to pause the video as you need to make sure everything is organized. Now let's say we have 3 credit cards, creditor A, B, and C, and then in column B, the balances I'm going to put are 300, 100, and 350, and then in column C, or the third column, for the limits, I'm going to put $600, $1,000, and then $500. Now, for the fourth column, my utilization ratios are going to be the following. 300 into 600 is 50%. 100 into 1,000 is 10%. And then 350 into 500 is 70%. Okay, now the tip and trick that I've seen, again, just a recommendation that I've seen, is to get each credit utilization rate under 30%, and then under 20%, and then under 10%. So in this example, we've got credit line A and C that we can work on. In credit line A, we have a 50% utilization ratio. And then in credit line C, we have a 70% credit line ratio. Okay, now I'd like you to get your calculators out. What I'd like you to do is multiply your limit, in this case for A is $600, times 29%, and that is $174. So that tells me I need to pay the balance of that credit line to make sure it is below $174 so that only a 29% utilization ratio is reported. And then on credit line C, 29% of 500 is $145. So I make sure I pay my balance, which is currently $350. I need to make sure I pay it to below $145. And then you're going to do that for 19% or 9%, depending on what you have available to pay down for your credit. Okay, now here's where it gets very specific. For the statement closing date, when you make each one of these payments, it needs to be on there and cleared before the statement closes each month. So let's say your statement closes on the 20th. I'd like you, and again, just a recommendation, to make whatever payment you're going to make 4 to 5 business days prior to that date so that it records, it updates your balance, and then when that statement closes, they update that balance to the credit bureaus when they send the payment in every month. Not when you pay it when it's due, but do it beforehand. That little trick right there is going to help you. I would like to point out that many people look at apps such as Credit Karma and Experian to see what your credit utilization ratio is. However, that's an overall ratio, and when looking at improving your credit scores, they look at individual lines of credit, not bunched up all together as one. Okay, I want to throw in an added tip here that may be helpful for many of you. If you have a good established line of credit and a relationship with your credit card companies, you've been there for years, and your credit utilization ratios are within decent, they're not maxed out, you may want to reach out to them immediately and ask for an increase in the line of credit. Because if you have, let's say for instance, you have a $500 balance on a $1,000 limit card, that's a 50% utilization ratio. Well, let's say they are willing to give you an increase from $1,000 to $1,500, or even let's say $2,000. Now your credit utilization ratio went from 50% to 25%. You have a $500 balance into a $2,000 limit. So now you're at 25%, you're automatically below that threshold, that first threshold, and you're getting improved scores. Mind you, you didn't have to pay a single dollar towards it. These little tips and tricks become important because every 20 points on your credit report that it goes up is going to decrease the cost of your interest rate. Might be marginally, but it's something. And it helps you save. And so in an effort to earn your business and work side by side with you, want to provide value to you. And so if you're considering getting pre-qualified for a mortgage or looking at buying a home, feel free to send me a message or reach out with any questions. I'd be happy to help you.